Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. Are you ready for Snowmageddon? Because there's some coming your way, I think.
Well, we will see. We will see. I am certainly ready. They said a few days ago anywheres from 6 to 7 inches up to 2 feet.
Yikes.
And I was like, although I will say, look, since I've lived here, and I've lived here 28 years now, every time they predict one of the storms from the west, like a week ago, they get it wrong. They say it's going to be bad, and it always goes north, and we don't get that much. And we got, a little tiny bit. What they get wrong are these snowacanes, these nor'easters that blow in off the ocean. And one year we got 19 inches where they were predicting like literally a dusting. And then another year we got like 13 inches where they were saying we're going to get, a couple. So now we're down to 6 to 7. It's possible, if that thing stalls and just spins, we could get a lot. But I am ready because my daughter was due with her fourth today, and she is in active labor as we speak. So
all right,
get baby out of the way before the snow starts tomorrow, which is good. So that's exciting. And then, and I'm wearing the Seahawk blue. Next week, I'll have the Seahawk blue plus the neon green underneath. Because the Hawks will be playing the Super Bowl. But I'll do a quick reveal. I'm in the office today because I got kicked out of the house because we got the grandkids. And so wife said, go where it's quiet. And but I decided to wear the red today, blood in the streets. And I have the original sock game for the Genesis block. And the chancellor bailing out the banks for the second time. And I think it's important because, there was another, I think it's now 451 stories on the death of Bitcoin. And there was another one written. So I decided to pull those socks out. Bitcoin's not dead. Yes, there's quote unquote blood in the streets. Although where the real blood is this morning is in gold and silver. I mean, here's a crazy thing. And so, gold's gone parabolic, silver's gone super parabolic in the last couple months. And just this year, gold was up another, I think, 30% after being up a huge amount last year. It's like 20%. But silver was up, 40-something%. But overnight, gold crashed about 10%, silver crashed about 22%. Wiped out, quote unquote, right? $9 trillion of market cap. And
unbelievable.
Okay. First of all, that quote unquote 9 trillion never really existed, and it didn't get wiped out. It's not like someone lit $9 trillion on fire, because what happens, and we've talked about this a lot, is when you take the price that a small amount of something sold at, and you multiply by all the existence of that, okay, that's technically the market cap. But if everyone tries to sell, that's not what you're going to get. So I don't know. I've never liked market cap, particularly when you talk about stocks. Like with a commodity, at least there's some methodology. Like there are a bunch of ounces of gold, but shares of stock, those are pretty ephemeral. Long story short, that's I think what's happened. But Bitcoin is down, right? It's down like 6% in the past week since we were together, or maybe it's 9% and 6% in the month or something like that. But it's in an interesting spot, and we've talked about this, right? Not very popular to say we're in crypto winter. but we kind of are. And the 4-year cycle or 311 cycle still exists. And everybody was like, no, it's up only. It's institutional. We're in the cucumber market. Like, the what? Well, there's something called the banana zone, right? Where you get, a parabolic move at the end and then a reset and then a parabolic. So it kind of looks like a banana. And they're like, no, that's gone. Now we're in a cucumber market that's, just a straight market, up only. Like, well, name one of those. They don't exist because humans are going to human. And so look, the real test is actually the end of this week. So in bear markets, and look, I'm not a technical analyst guy, but I like technical analysis because it's the summation of human activity. And it's funny, people are like, oh, that's just voodoo or witchcraft or lines on a piece of paper. I'm like, let's see, George Soros, Stan Druckenmiller, Paul Tudor Jones, Julian Robertson, all those guys use it. So maybe it has some value. I mean, greatest investors in the history of investing all think there's some value. So, but my point is, you got a 20-day moving average, you got a 50-day moving average, you got a 100-day moving average, you got a 200-day moving average. Now you can also do weekly moving averages. Long story short, the 100-week moving average, if you think about it, that's a long time. 100 weeks is a long time, 2 years. So you rarely fall below that in a positively trending market of whatever it is, whether it's gold, whether it's silver, whether it's Bitcoin, whether it's IBM stock, doesn't really matter. And then you got the 200-week moving average. And the 200, because now you're talking 4 years, you're pretty unlikely to violate that because that is basically just the sum of what's happening in the short term over the long term. So long story short, if you break the 100 week, which we're at 82 and the 100 week is like 86. So if we don't close above that by kind of end of day, or maybe it's I can't remember if it's today or Saturday, but the weekly candle, every other time, it's only been 7 times, but every other time we end up at the 200 week, which is 68K. So, and we talked actually about this last week that there are people calling for 20 or 30. That's not really that logical, right? The cost of production's around 71K. That fell a little bit this week because a lot of mining got shut down with the storm. So now that number's probably in the 60s. And Peter Brandt had a number around 63. He's a great technical analyst. And I'm not saying that's going to happen, but it's probably pretty likely because, again, humans are going to human.
Yeah, no, it's a good point, Mark. I mean, we were talking a lot about it yesterday when we had our webinar to kind of kick off the year and thinking about, what the markets look like and, beyond Bitcoin, kind of what is the intersection of all the tech side looks like. But it kind of begins with, an analysis of what's going on in the liquid markets, because that's a little bit of a snapshot. And exactly right, with kind of the 100-week moving average, we kind of are falling below that. And to me, it's also pretty astounding that 100-week moving average is so high, right? Because I can remember a time in my mind where, like, for the longest, it was not near 100. It was like in the 50s, 60s, it dropped to like 30, it dropped to 20, and then we got this like really big number due to, the ETFs lighting the world on fire and having all the DATs lighting the world on fire. And then all this institutional money came in. So, the fact that I started looking at these numbers, I was actually a little bit surprised it was so high. And then even the, expanding back the 200 week, I thought that was still pretty high.
No, they are. And think about that. That's why I'm wearing the socks, right?
Yeah.
If you go back to first principles, the idea that those long-term averages are now, 68 is just about the level of the last cycle peak, right? From 2021. And 86 is materially higher. So what we're doing, and this is one of the things that I think is is unique in assets that are real, durable, long-term assets. I was actually just on a call with a buddy of mine. He's a portfolio manager up in New York, and he runs one of the ETFs that does kind of digital asset, stuff of the future. And we're talking about Amazon. And, Amazon forever, people have said, that'll never work. It's overvalued. And it just keeps going. Now it's volatile. I mean, look, Amazon's been a public company 28 years. Every year it has a double-digit drawdown, and the average is crazy. The average is 31%. On
That's
average,
insane.
You lose a third of your money every year. That's crazy. But it just keeps going because it's making higher lows and higher highs. And so, yes, there's volatility. And the same thing with Bitcoin. Yes, there's volatility, but we're making higher highs and higher lows. And that's the environment. Now, look, if we roll over from 82 and we do hit 68, then we will be in, unfortunately, what's called a distribution pattern as opposed to an accumulation pattern. An accumulation pattern is where you consistently make higher highs and higher lows. So yes, there's this sine wave of volatility, but you are accumulating. And so over the long term, over the 17 years, there's clearly been accumulation, right? Lots more people own it today than owned it 17 years ago. And that accumulation builds up. But within an accumulation pattern, you get a distribution pattern where you're making lower lows and lower highs. It's like a ball bouncing down a set of stairs. Perfect example, gold. Everybody loves gold right now, right? Gold's beating Bitcoin. Okay. People remember, actually they don't, from 2012 to 2023, more than a decade, the price of gold was the same.
Wow.
Oh, but it wasn't the same. Actually, it wasn't the same every day for that 11 years. Over that 11-year period, it fell 50% in a distribution pattern from 1,800 down to 1,000. So not quite 50%, 40 something. And then went into an accumulation pattern to get back to where it was. And then it broke through the, flat zone and triggered a short squeeze that we are in right now. And you got all these banks, and it's the same thing in silver, scrambling to cover their shorts. And that causes these temporal boosts. And then the speculators come in, the leveraged speculators, and that's why you get this crazy volatility we've seen in the last week. But think about that. Gold, which is supposed to be this perfect store of value, for 6 years, you lost half your money. And then the next 5 years, it took you to get it back. And so for 11 years, you were dead flat. And I'm not complaining about that. I'm just saying that humans they phase in and out of affection for assets. Mm-hmm. Whether it's oil, whether it's wheat, whether it's corn, whether it's fine art. Well, maybe that's not fine art, but it is art. It's not fine art. I mean, it's a cool picture, but it's not fine art. Whether it's, collectible cars or whatever it is, or, collectible guitars like yours. X, you're going to love this. So I just discovered, you already knew this, that the Gibson J45 is like the Axe guitar, right? If you're an acoustic player, it is the Nirvana, not the band Nirvana, but like the Axe that you want is the Gibson J45. And so I like, okay, and I've graduated from beginner. I had this amazing, it's kind of like, remember when Bitcoin was stuck, at kind of 30,000, and then suddenly it made this jump and suddenly it was 60,000. You're like, well, how did that happen? I had one of those. And
Nice.
and it's
Like
funny. And here's the crazy reason why. I discovered these two guys. They're Scottish gigging guitarists who make YouTube videos. And so now I'm aspirational to gig. And my wife's like, you want to what? I'm like, I want to gig.
All right.
You can't say that word. I'm like, no, but I really think I want to do it. And so anyway, so I've been watching these guys, and I don't know what it was, something about the way they described how to do things and how they simplified things. And the big one for me was this magic button on Unlimited Guitar, this app, where you can transpose the chords back to cowboy chords. So you can make all these complex chords that real guitarists can play back to the simple cowboy chords. I'm like, what? And it sounds like the song. And so now suddenly I went from being able to play, I don't know, 3 or 4 songs. I can play 20 songs. I mean, I was playing Sweet Child of Mine last night, and my son's like, that actually sounds like the song. And anyway, so I don't look like Axl Rose, but now I can
play. Taken on the road then, Mark. Well, we shall, you heard it here first, folks. This act will be taken on the road. Mark will be taking his talents to a whiskey bar near you.
Yes, that's right.
Or airport bar. That's
airport
another
bar,
one.
And the airport's probably the place to do it, because I'll never see those people again. And so they won't realize how bad I am. But my point was the J45, it's the X, but there's this Epiphone copy of the J45 that I think I might try first, because a real J45 is very expensive, and I'm not going to spend that much until I can actually play like you, and then maybe.
Correct. And we mentioned, Mark, that there are very much temptations in learning anything, but especially, within guitar, there are kind of 2 ways to make you better. One's harder, one's easier. Putting in the work as you are doing will definitely make you better. But in the short term is, if you get better gear, yes, you will sound better, but it'll also enhance your flaws, right? So if you are, making a misnote or misstep, it's kind of like a Stradivarius violin. It's even more in tune with that. But
well, it's funny, X. My daughter's having a baby. My wife had our last baby when she was 47 years old, and they've done a study, and one of the things that centenarian women have in common is having a baby after age 45, which is kind of an interesting stat.
Oh, wow.
And so my wife's going to live to 100 for sure. So that means I got some work to do, because guys, we don't normally live that long. Well, I saw this study the other day. There are 4 things you can do as anyone to live longer. And 2 of them were very near and dear to my heart. One is be a musician. Right. And again, I wouldn't call myself a musician, but I'm aspiring to be a musician. So, and that adds 6 years to your life.
Oh, wow. Amazing.
But the one that was awesome, gaming, 4 years. And I game so much that maybe I'm going to get double. So I could get 8. So maybe I can take the average age, and now I can add 4. So anyway, but I was so psyched to learn that. That was cool.
Well, plus the compounding, right, Mark? Because some musicians don't have the healthiest lifestyle, but you're kind of a health nut, so you're going to get some of those added benefits of, not having the chain smoking on stage, or some of the tour bus antics that we have, really, really seen over the years. But maybe kind of wrapping up that point on BTC before we pick it up on what's been happening on the IPO market, which we're kind of having some reflections on, which so much of what we see in the kind of IPO public markets are really an extension of, in a particular time, what is happening with Bitcoin sentiment. So I think you're absolutely right. That kind of price watch on 75K is so important, because that was kind of like the last big drop that we had back in April of 25 after all the tariff talks. And then there was a lot of buy support that came in that allow us to kind of push through that level. So if we kind of break in from the 80s and go down, that's what everybody is watching. And I think we have to call it like it is. We always say we call balls and strikes on our show. We were very kind of curious to see, are we going to hit the 100K this month? Because Mark, just last Wednesday, we were at 92K, right? And so we've kind of come down quite a bit. And there's been a lot of, as you mentioned, blood in the streets. Just to recap, we had more than almost, I like this 777 million in levered long positions wiped out in a single hour, and almost 2 billion in a day.
Yeah.
As you started seeing some of these declines, down to the 81K mark. So clearly we did not hit the 100 that I was kind of thinking, okay, if we do that, we are kind of basically changing the calculus here in terms of what winter really is, in terms of how cold does it get. We're going with the cold beat because there's snow coming your way.
Yeah, no, I like it. Yep, exactly.
And so, now we will wait and see, but, maybe changing gears slightly, Mark, and thinking about what does it mean for a company to kind of get to the other side of the road. We have Morgan Creek. We're very fortunate last year with some positions that were finally, taken public and have done well. Some have also kind of struggled there, but maybe taking a ginormous, view of that, what has happened in kind of that public transition here. So we saw a couple of companies do well in that listing, and some companies, not do well. Overall, we saw over 12 of these companies, kind of go and strike. 11 crypto IPOs strike and raise a combined 14.6 billion in 25. And where the stat that kills me, it's a big jump from 24, where we had, 330 million in IPO value. So we have
just let that hang there for a second.
Yeah.
The idea that we have multiple multi-billion dollar companies emerge in this sector, and look, and if you would have told me 10 years ago that when I was 52, that when I was 62 I'd be wearing a hoodie and I'd be talking about digital assets, I would have said you're out of your freaking mind, right? I would have, but it happened, and it's because this is a technological innovation that is so profound and substantial that it's going to create not just billions, but trillions of dollars of value. And there's still people, and I run into them all the time, who are like, no, this is all just a scam. It's a get rich quick scam. I'm like, no, it's exactly the opposite. I mean, just simple thing. Gold. Most people listening to us, and again, we thank all the listeners, but most people don't own any. Right? They literally don't have any gold coins. They don't have any gold bars. And maybe they have a little bit of a gold ETF in a portfolio somewhere, but even that, most people don't. The average weighting, it's crazy, Morgan Stanley said the average weighting is 0.7%. That's the average, which means there's a whole bunch of zeros. And there are a few. I was talking to a buddy yesterday. He has 10% of his wealth. He has 10% in Bitcoin, 10% in gold, and then a bunch of other stuff. But that's pretty rare. But most people don't have it. Now, here's the problem. Let's say you did. Let's say you had a little gold bar here, and you hired an agentic AI, which we'll talk about here in a second. You have this agentic AI in your computer, and while you're listening to us, it's out there doing a bunch of stuff. It's making some plans for a reservation at a restaurant. It's filling out your calendar. It's entering some stuff into your CRM. It's reading some quarterly reports that you were going to get to later and giving you a summary. And so it's doing all that, and it needs to make some micropayments. Are you going to shave off some gold from the gold bar to give to the agentic AI to make those payments? No. Are you going to is that agentic AI going to use a cryptocurrency of some sort, stablecoin or Bitcoin or Ethereum or Solana or something? Yep, that's exactly what it's going to do. And so as important as gold is as the base layer for global money, fiat, there is going to be a native currency to the truth net, as I call it, or whatever you want to call it, the internet of everything, the internet of value. And that's not, we're not going to stuff gold bars in our computers. It's just not going to happen. And so I'm not taking anything away from gold. And like even people like Peter Schiff, Okay, Peter, how much of your net worth is in gold?
Mm.
It ain't 100%. I guarantee it's not 100%. I guarantee it's not even 50%. And I don't even know, but I bet you that it's not 50%. And the average person, it's zero. So gold plays an important role in the world, but Bitcoin and digital assets and crypto and the technology around it and the infrastructure around it is going to be the base layer of the digital future.
Sure. And as we
That
kind of make that transition,
is incontrovertible, but yet there are still people who are like, no, that's just not going to happen. And those are probably the same people that said, nah, I'm not going to get a PC because my, calculator's just fine, or I'm not going to get an ATM card because I like going into the bank. I'm like, who likes going into the bank?
That's right. We shouldn't be dominated by the tyranny of the minority, which will always be the laggards. There'll be some people that will hang on to the dumb phone and not get to the smartphone for whatever reason. But, the points that you're making, Mark, it's exactly kind of what we signal in this transition, right? So we've had some of those kind of pioneer companies already go and IPO. Some have done well, some have not done well. So as we kind of look to this next phase, you're going to start seeing a different generation of companies that really define compliance frameworks, recurring revenue streams, robust risk controls, kind of things that are really like aligning themselves more towards traditional public markets that they're trying to enter. But I love this stat, Mark, as we kind of think about last year, right? Or we think about how many IPOs came in. It's a pretty big number in the billions, but I'm sure that you saw this sign to be outdone. And I think this is part of the reason we see the volatility in our industry, because there is a lot of shift towards a new risk on asset, which is any AI valuation you may look at. So Anthropic, if you look at 14 billion or so in all these IPOs, long awaited, a lot of work building up these companies, the best of the best. In one deal, Anthropic raised 10 billion to come to a 350 billion valuation led by Coatue, GIC, and Sequoia, as they've kind of now gotten to this new echelon. Mark, what are your thoughts when you see this? Somebody's got to win, but I think that also comes, unfortunately, at the expense of the crypto industry, because all the oxygen and the capital is getting sucked out.
Yeah, I mean, it's certainly sucking the growth capital oxygen out of the room, for sure. So it's harder to raise big rounds of capital for some of the digital companies. But so many of the digital companies, take Coinbase, for example. Coinbase doesn't need to raise any money. They're quite profitable. They clearly should have a higher valuation than an unprofitable company like Anthropic or OpenAI, but they don't. And look, I have really strong feelings on this, as you know, in that the AI hype is beyond anything I've ever experienced in 40 years of doing this. I mean, it's the craziest thing I've ever seen, and it's so narrative driven as opposed to fact driven. And look, Coatue, they're really, really smart, like super smart. Sequoia, super smart. Are they going to make money investing at that valuation? I have a hard time understanding it, other than the greater fool, right? Will there be some greater fool that once that thing goes public says, oh, this should be a $500 billion company? Like, well, okay, but why? I mean, and I don't have the numbers at my fingertips the way I do for OpenAI, for Anthropic, but OpenAI has a $600 billion valuation right now, right? $600 billion. So twice Anthropic. Even though Anthropic now has a higher market share of LLM usage than OpenAI, which no one talks about, like 32 to 25. But here's the problem for OpenAI. They lose $12 billion a year, and it actually might be 16 this year. So lose, not make. So yes, they had revenues of 12-ish billion, but they lost an equivalent amount. So the only way they can continue is on the kindness of strangers by raising capital at these inflated valuations. And the problem is that loss is expected to go higher, not lower. Like, when Amazon started, yes, they lost money on every transaction, but Jeff joked, we make it up on volume. Ha ha ha. No, what you did is over time, you shrunk the loss because you got more efficient. And then you actually started this other business, AWS, that's wildly cash flow positive, and that gave you the fuel to ignite the liftoff. But the problem is OpenAI spends $3.35 for every dollar of revenue. You don't make that up on volume. I mean, you lose more. And so either you got to change your business model. Like, you got to say, well, okay, subscriptions aren't working, so now I'm going to sell ads. That's what Facebook did, and that's what Instagram does. Okay. But here's the thing. If you're typing into a tool and asking questions, like I said, tell me the best gigging guitar. Literally, this is how it went down. This is about how I learned about the Gibson J45. Okay. And it gives me an answer. If that answer is free and open, I'm going to use it. If that answer is driven, like why I don't use Google anymore, if that answer is driven by who paid the most to get product placement, it's useless. Not going to use it. And so I struggle with that whole industry. I'm not that LLMs aren't great. They are. But the problem with them is they are very specific tools to do a very specific thing. And the biggest problem, I don't remember if I talked about this last week, but a week and a half ago, I did my 10 surprises, right? A week ago Thursday.
Mm-hmm.
And in preparing for that, I had to do a bunch of research on a bunch of topics. And one of them was Japan. And so I was doing some stuff on the disastrous policy decisions that Prime Minister Takaishi has made. She's actually not very good at her job, and I think she'll be out pretty soon. But bottom line is, I asked ChatGPT, when was Prime Minister Takaishi elected? And it said, no, she wasn't. Like, what do you mean? Well, she wasn't elected. The such and such is still Prime Minister. I'm like, I'm pretty sure that Takaishi is the Prime Minister. Oh, you're right. So yeah, she was elected last year. And I'm like, if I didn't know that she was, and I just accepted the first answer, well, how does that tool, that tool isn't a tool like a search engine that is literally searching. It's pattern recognizing words, and she wasn't elected in the normal course. So it was, I don't know what it was thinking, but it gave bad information. And only because I knew that I was right and it was wrong was I willing to force it to give me a right answer and to give me the date in October. But I just think there's some serious problems, and there's a lot of people who've written very good stuff on this. But at the end of the day, the alligator jaws are forming. So you said winners and losers, and digital assets are losing in the sense that some of the capital's going over here into, I'll call it the cash incineration engine. But the real alligator jaws is traditional software stocks and the AI stocks. The traditional software stocks are getting obliterated. I mean, Microsoft was off 11% yesterday or whatever, but that's the good news. Like, ServiceNow is down 60%, and just all of them are down 30, 40, 50, 60% because they're saying they don't have a business model anymore. Remember, these were the darlings of the last decade, right? CRMs and HR systems and cloud systems, and now they're all going in the toilet because people are like, well, they're gonna ask an AI to do it, and the AI is going to code. Well, but the problem is AI code turns out on subroutines, it's good. Not 100%, but, 2 9s. You need 5 9s, but 2 9s. For full programs that operate, it's not really that good. And so will it get better? Sure. But I don't know. The idea that suddenly people are just going to say, oh, I'm going to transfer all my accounting software to ChatGPT.
Mm-hmm.
Just not going to happen. No way. I don't think, but we'll see.
Yeah. And I think, as you kind of look at where that valuation comes from, there's a reported 10 billion in revenue that Anthropic is doing. And so, you're looking at a 35 times revenue multiple. Mark, we have been in this business long enough to know that 10 was considered, the peak of the multiple. Maybe sometimes you get 12. I'm not going to count the early stuff that was pre-revenue because those are usually capped at a fixed type of valuation, like a safe, but 35 times. And of course, they reportedly are burning 3 billion a year. It's probably higher than that. So, that is kind of tracking them towards, reinvesting. And Mark, you're from Seattle, so you can tell me if this story is true, because I heard this was reported that in Seattle, so Microsoft was very famous for not giving back dividends. And, when every time, Gates was asked about that, he said, I'm a tech company. I'm going to reinvest in the underlying technology to make the stock better. Why would I give cash back? So finally, at one point, he relented and gave back dividends. And the story goes that there were so many people in the city of Seattle that held Microsoft stock and in turn got the dividend that the ATMs ran out of money as people went to go and redeem the Microsoft dividend. I mean, I don't know if that's true or not.
No, it is true. It's certainly true. And Seattle is unrecognizable from when I grew up. In fact, it's actually pretty cool. So there was a list that was just released of the 10 best cities to live in, highest quality of life in the country. And Kirkland, where I grew up, and Bellevue, where I used to hang out all the time, were two of them. And Chapel Hill was also one of them. Now, the fact that there were 5 cities in Massachusetts, that just ruined the credibility of the entire survey. There's no city in Massachusetts that beats. I could name 50 cities in California with higher quality of life than Massachusetts. And there was one from New Jersey.
Any listeners from Massachusetts, we still love you.
I love people from Massachusetts. But there's just, and my son-in-law was like, well, Newton's a cool town. I'm like, fine, but it's going to be under 2 feet of snow, and no. So not that snow is the only reason not to live someplace, but
a lot of schools there. But yeah, to your point, I mean, it's one of those things where things are shifting and changing, and maybe as we think about what this means in how connected the world has become in the world of technology, it was a really interesting study that Gartner has been doing and looking to this idea of sovereign AI. And this was where we today I've been having this blood in the streets conversation. This is firmly in Sinister Saturday's territory, because we have been warning the listeners that this is coming. And so now, big fancy firm like Gartner is talking about it, and we'll, transition and look at this from a technical side in the chart of the week. But this is an idea, Mark, that more and more countries are going to continue to invest in AI. I mean, there's a reason that GIC was the largest investor in Anthropic, because all of these kind of sovereign investors and sovereign entities have the most valuable thing that LLMs need. It's data. And so that will be key input. So I will share the screen, Mark, and let me know once this becomes visible. And this will be more of a talking aid as we kind of look at what this means just from a computing power type of standpoint. But really the point is more that as we kind of look at this sovereign AI picture, basically 35% of all countries will be locked into a regional specific AI platform built on proprietary local data. That's what Gartner is kind of pressuring in some of these stats. And basically the idea is that these are countries that are seeking their own sovereign AI identity, they'll have to invest at least 1% of GDP into AI by 29. And so what we're seeing up here is kind of some of those peak clouds, right? So we have Azure, AWS, and Google. And you love the size of this, right, Mark? 3 nanometers, an astoundingly small size.
Yeah.
And, what we're looking at, in the teraflops are basically computing power and the ability for them to do certain calculations. And you see one company way out in front on this, which, you mentioned about some of the older technology companies, Microsoft included in there. When I look at this kinds of chart, Mark, and I would love to hear your thoughts as I give you the baton, is this idea that this is why we're seeing so much money getting poured into AI, because there is a pay to play here, and it will continue to hopefully transition these companies into the next tech wave, or they will be left behind as some of the ones that are not really able to make this transition. So kind of curious your thoughts on the matter.
There's so much good information, in terms of, charts of the week are always important. We say, pictures worth 1,000 words, charts worth 1,000,000. But charts are always important, but this one just has an incredible amount of embedded information in that, on the surface, it is, a list of the specs of certain chips. So process node is literally the die that TSMC is using to produce it at 3 nanometer scale, which, is currently the industry standard, but they are now talking about making chips at 2 nanometers. Then you've got the operations per second in terms of the floating, I never forget the L, but flops, teraflops. Then you've got, things like capacity and high bandwidth memory. And memory has become, like, that HBM capacity, it looks like just like a number, like, on the Google TPU, which we'll talk about TPUs in a second, is a good number. And the AWS Titanium is a little less good number, but then the best number is the Maya chip at Azure or Microsoft. And you're like, well, okay, but why does this matter? What is high bandwidth memory? Well, in brute force processing, right, which is what LLMs do and what people call AI, it's not. AI is a much, much bigger thing. The thing that everybody's talking about, the Anthropics and the OpenAI, that is LLMs, okay? And LLMs, large language models that, again, predict words and allow us to ask questions and do tutoring, and they're wonderful for lots of things. They're horrible for some things, but they're wonderful for certain things. What they rely on is data, to your point. And that data has to be analyzed, right? And they train the models, and then it has to be processed, and it has to make decisions with that data. That's inference. But if you think about it, that data has to go back and forth and get stored somewhere. And then once, let's say you're using generative AI and you make a nice cat video, which everybody loves their cat videos, right? Well, that cat video then has to live somewhere. It has to go into memory. Well, so what was the best performing stock last year? Was it Microsoft? Was it AWS? Amazon, or was it Google? No, they all did fine. But the best performing stock was a little spin out company from a hard disk company. So the hard disk companies, Seagate and what's the other one? Western Digital, both outperformed all three of the stocks on here. But they spun out this little company called SanDisk, right? We've all seen the little SanDisk little cards that we plug into our, switches, or, those little, and what's crazy, right? The first kilobyte drive, like that IBM made, kilobyte, was like bigger than a truck, like a flatbed truck. Now you can get terabytes in a form factor, that fits in a little switch console, and you can carry it around. So the price of memory has gone down, the amount of memory you can get. So SanDisk, this little company, went up 750% last year, and then it went up another like 60%, and then it went down a little bit. But the bottom line is, the problem for LLMs wasn't the processing speed. That mattered. And these processors, you can see the Maya processor is faster, okay, can do more flops per second. Okay, that's good. But the problem is, no matter how fast the processor is, if there's not enough memory or not enough high-speed memory, which there wasn't, and so it hit literally, it's called the memory wall. And the memory wall limited, it's like, I'm a biology and chemistry guy. That's my training. The rate limiting factor is one of the most important concepts in everything, right? You can only make NaCl. It has to be enough Na and enough Cl. If you have less Cl, that is the rate limiting factor. And it doesn't matter how much Na you have, you can't make more salt unless you get more Cl. So same thing is true with if you are processing all that data, but you don't have enough memory or fast enough memory to get it back and forth, your system will be inferior. And so all of these guys are in an arms race for processing power. So TPUs are really important. Grok, our portfolio company, okay, the guy who worked on the original TPU at Google, this guy Jonathan, left and he formed this company Grok. And so Grok started making TPUs, but they're not allowed to call them TPUs because it was service marked by Google. So they called them LPUs. And Google made TPUs. So then Google releases their Gemini processor, LLM, that was trained entirely on TPUs. And we've talked in previous shows that training was always done with GPUs, which is why NVIDIA's market cap went so high, because you couldn't use CPUs because they weren't fast enough, because they only process serially instead of parallel. So the TPU was all the rage. So what does NVIDIA do? Well, they buy Grok or acqui-hire. They hired all the chief people. And so now you've got this race going on with TPUs. Well, but then it turns out that innovation around chips, and again, we talk about this, we like A, B, C, D, AI, blockchain, chips, data. But what we really love are those intersections. So AI tools that process data that may store on blockchains or not, but that need chips. So now you got this Trainium chip at AWS. Well, it's equally fast, maybe a little less fast than the TPU. So they tried, and you know, in some tests it's equally fast, and others it's not quite as good. But fine. So then Microsoft comes along and says, we have this chip and it's faster. Now this is interesting. So are they going to buy NVIDIA GPUs or are they going to use their own chip? Well, wait a minute. Microsoft's a software company. They're not a hardware company. What are all those Xboxes? Those are pieces of hardware. You know, it looks like, you know, they may be transitioned. Now, all of these companies don't make the hardware. So again, what's embedded in this chart that isn't like screaming at you is this Taiwan relationship and South Korea. Performing stock market last year, not the US, South Korea. Well, why South Korea and why Taiwan? Taiwan stock market did pretty well too, because they're dominated by these memory companies and these fab companies, because all the fabs in the world, the ones that matter, are in Taiwan and Korea and China. So Southeast Asia dominates the production of these chips. Now, the chips are going to continue to iterate and get better. There's still the LLMs, which use the chips, right, to train and then do inference. Those are two separate things in an LLM or in an AI system. And what we're seeing here is the dominance isn't your code, right? The code of an LLM, there are a whole bunch of them. Everybody's got an LLM. And, they keep going back and forth as who's better. But at the end, what they're getting better is who has access to the faster processing and who has access to the better memory. And in DeepSeek case, because they didn't have access to the best chips or the best memory, who can write software to work around the limitations of that physical transport of data back and forth. So again, super long and ridiculously intricate discussion, but this chart's so data rich.
Yeah.
And it's about everything that we focus on. And it's just going to keep iterating because we're not in a linear path. We're in an exponential path. And what people can't comprehend about exponential math, right? If I stand up and I take 20 linear steps, I go to the other side of the office. If I take 20 exponential steps, I go around the world twice. And I just learned this the other day. Let's change that to 30. So 30 steps linear, I get to the front door. 30 exponential, I go around the world 28 times.
Jeez.
28
Unbelievable.
It's exponential growth is the most amazing thing.
Unbelievable. I think well said, Mark, because this chart basically is showing us who will be kind of the next dominant frontier in tech. Is it going to be kind of the high scalability, but maybe the actual computing power isn't as strong? That's kind of what Microsoft is showing. Or is it going to be more frontier deep tech, like what Google is trying to do? And basically also, to your point, Mark, Amazon's way behind. They got to do some catching up, but we'll probably cut it there, Mark, and we'll wish all those that are in the way of the name storm. I don't even know the name of this storm, but let's call it the next winter storm. Please be safe. Hopefully we'll be spared. And I want to thank everybody for tuning in. And as always, remind our listeners to stay current.
Nope, thanks, X. We're going to name this storm Benny because Benny and the Jets, right? It's a big jet stream storm. So we're going to call it Benny. So Benny and the Jets will show up here in North and South Carolina. Everybody stay safe. And we'll talk again soon.
Thanks. See you, Mark.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.